Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 14th of January 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @DS_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of, but as it's a Monday, of course, we'll focus on things from a weekly perspective. In terms of the narratives or the stories, really, over the last week, pushback from some of the majors, I think, is the main theme. For example, cable, or in cable, I should say, we saw the pound continue to rally in value, trending up to 128.51 shortly before we recorded the video, up by around 0.57% against the US dollar over the course of last week on hopes of a delay to Brexit. I said in my webinar on Thursday that I thought the balance of risks actually in sterling were more weighted to the upside, and that sterling would be more sensitive to what the market would perceive as good news, and that seems to have been borne out. Elsewhere, the Australian and New Zealand dollars were also gainers over the course of the week. A little pause for breath in the rallies in the Australasian currencies after some Chinese data, which we'll look at a little bit later on in the video. Nonetheless, though, up 0.55% and 0.83%, I should say, across the Australian pairings there against the US dollar over the week. Japanese yen and Chinese yuan, the other major players in the Asia Pacific region. The yen continued to strengthen against the US dollar, adding another 0.55% over the week, and the yuan continued on its recent run of strength, I should say, down by 1.2%, also increasing in value by 1.2% against the US currency, and almost up by around 2% over the course of the month to date. So yuan strength, the key feature of January to date. The Mexican peso also taking money off of the US dollar and adding 0.97% to the good over the course of the last week. Interestingly enough, dollar index trading at 95.55, modestly lower on the day and the week, but not by any great degree, and still managing to stave off a move below that 95 level and a new big figure on the way down. Okay, so what's on the calendar today? Events that may move the markets. A pretty light calendar, to be fair, today, so it's a gentle start to the week. There's a holiday in Japan. We've already had inflation data out of Australia for the month of December, a read of 0.4% there. That's the pick of the data, and the one we'll look at in a bit more detail momentarily. Balance of trade data for China for the month of December, imports, exports, and the total trade surplus there. And then to come this morning at 10 a.m. GMT, we'll have industrial production data out of the Eurozone for the month of November. And then we pause until 16:30 this afternoon, and crossing over the Atlantic for 3 and 6 month T-bill auctions. Obviously, any of these funding actions in the US are of interest at the moment with the ongoing government shutdown. It just sort of reflects how the market's prepared to fund a government that's edging ever closer to crisis, I think it's fair to say. And then at 2100 GMT in New Zealand, we shall have business confidence data for the fourth quarter. That's the NZIER business confidence data, just to be clear. And at 21:45, we'll have food price index data for the month of December. So a look at some inflationary pressures, or not, as the case may be, in New Zealand. And then at 23:50, just to round the day off, we shall have money supply data out of Japan for the month of December, M2 plus CDs. And money supply data is increasingly being watched as a source of information about how underlying economies are performing. The thinking being that if there is pent-up demand in an economy, then the money supply of that economy should be growing, and vice versa. Okay then, breaking news and comment that's caught my eye overnight. First of all, those Chinese balance of trade figures. Chinese exports fell in December with their largest monthly drop for 2 years. And though the country's trade surplus grew overall to an impressive 57.06 billion versus just 51.3 billion forecast, and November's read of 44.71 billion. But the market's focusing on that drop in exports, and therefore seeing that as further signs of a China slowdown. I'm not so sure that's the whole story when we look at the actual trade surplus figure. Meanwhile, China's investment in the USA has fallen by 84% over the last year, according to the FT, and this was its lowest level for some 7 years, just showing really that American scrutiny of China's investment is limiting the flow of funds into the US. UK MPs will gather today to debate Theresa May's Brexit deal ahead of tomorrow's crucial vote in Westminster. Nothing really has changed over the last couple of weeks, and there still seems to be very little room for manoeuvre or alternative to Mrs May's plan. And US earnings season will kick off this week with reports due from the country's major banks, and really an idea and an insight perhaps into how the underlying US economy is performing, particularly in that crucial financial services sector. Okay, food for thought, something to take away with you into the trading day and beyond. Why not think about this? Japan's labour market continues to defy demographics and social constraints. Now, Japan's population is ageing and falling, and the labour market is tightening, and we can see that quite clearly here as we see a sharp fall off in this orange line, which is the working age population between 15 to 64, and yet the size of or the number of people in employment continues to rise, and so that does seem somewhat counterintuitive. Well, what's happening is that Japan is diversifying the labour pool, and remember that Japan is a pretty socially constrained country, where women typically haven't been in the labour force, particularly where immigration is discouraged and there are few foreign workers, and yet those are the areas that we're seeing growth: women, foreign workers, and the elderly remaining in the workforce or coming back to the workforce to pick up the slack in an increasingly tight labour market. So very interesting to see that economics can overcome social constraints there, particularly in Japan. Okay, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative, and do take the time to read that risk warning thoroughly. Thank you very much for your time.